Welcome everyone for today's presentation or for today's discussion on the approved budget 2025-2026. As you all know that budget or budgeting is a crucial element, and each and every organization as well as our country have a budget that now shows the expenditure aspect of a country or an organization. Each financial year, the National Treasury always prepares a budget estimate and presents it alongside with the budget estimate. You all know that it's the finance bill that is now proposing the tax measures or where the government is going to get its revenue. So we'll be going to look at how the approved budget or how the government has allocated its revenues to the different sectors, also to the different departments. And we also look at the comparison now this year, how much has been allocated to the various ministries, and now compared to the other year, how much was allocated to that particular unit or particular sector. So I would welcome Cynthia Omwanda to say something about the National Taxpayers Association or to give a brief introduction. And then after that, we welcome our presenter for today, or our key experts in the budget, none other than Tom and Alex from TISA. So back to you, Cynthia Omwanda. If you can hear me, unmute yourself and do an introduction about National Taxpayers Association.
Thank you, Anne. Good morning, everyone. I hope I'm audible. So my name is Cynthia, like Anne has mentioned, Omwanda. And thank you for joining in. Also, welcome to this session. So the National Taxpayers Association is a civil organization that is committed to promoting transparency, accountability, and citizen participation in regards to public resource management. So we work to ensure that the taxpayers' money is used effectively and efficiently, and that the citizens have a voice in how public funds are planned, allocated, and spent. So as Anne has mentioned, engaging with the national and county budgets is at the heart of this mission or of our mission. So the budget is definitely not just a financial document, it's a reflection of our country's priorities, and it's a very critical tool for service delivery. So today's conversation is important because it will help us as citizens and stakeholders to understand where our money is going, and also whether it aligns with the public needs and how we can influence budget decisions for more equitable outcomes. So with that being said, Tom, you can kindly start us off. Thank you.
Thank you very much, Cynthia, for telling us or giving us a brief overview of NTA, that is National Taxpayers Association. So without wasting a lot of time, let me welcome our key presenters today. They introduce themselves, and then they can start to unpack to us what the financial year 2025-2026 budget has for us as a country and what it means for us. I welcome Tom, and then, or Alex, and then introduce. Alex, welcome. Then introduce.
Thank you, Anne. Hope you can hear me well.
Yes, I'm able to hear you. Kindly proceed.
Okay, thank you. My name is Alexander Reithi, and I'm here with my colleague Tom. So we'll be taking us through the financial year 2025-26 budget analysis. We'll do this in two steps. We'll have my colleague first part on the expenditures and the policies that underpin the expenditures as approved. And then I will come in, look at how we plan to finance and the implications of the financing and the financing gaps that exist. So allow me to welcome my colleague Tom to take us through the first part, and then Tom. Sorry, maybe before that, let me just. My name is Alexander. As I said, I'm from TISA. TISA is the Institute for Social Accountability, and the resources are spent in a manner that is accountable to the people. And our vision is to ensure that the citizens are alive to what is happening, and social accountability themselves. So that is why we are very much concerned about the budget, the financing, and ultimately how money is spent. So that is TISA in brief. So we'll now go straight into the presentation.
Thank you, Alex. Tom is yet to introduce himself. Kindly, Tom, unmute yourself and introduce as well.
Yes, good morning. I hope you can see me and hear me as well. And can you hear me?
Yeah, I can see you. You still muted. Kindly unmute yourself, Tom. Kindly unmute yourself. Thank you.
Can you hear me now? Can you hear me now?
Yes. You're clear.
Okay. Okay, thank you. Thank you for confirming. Tom, as Alex has said, I'm Tom Ogada, a program assistant at the Institute for Social Accountability. And allow me jump into the first segment of this presentation, where we will do the overview of the budgets and also sector allocations, so that we understand what it has for us. So the outline, what we are going to cover, just as according to what you gave us, is the budget estimates, where we will provide an overview, but also more details on what is in there per sector, and where necessary, we can go to. We can mention a few departments of interest just for our information. Then analysis, deep analysis of the key sectors. Then we will also see the observations, things that we have witnessed in our analysis, things that are coming up. We will also take you through that. Then what does this mean to us, and the impacts? Because we've noticed that the budget, when it reaches by the end of the financial year, a lot changes in the budget compared to what was approved. And this goes through different supplementary stages, and it alters a lot of things, as we will see in this presentation. This process, we used a few documents that guided our presentation and our analysis. The first key document is the program-based budget, that is the PBB, for the financial year 2025-2026. Then we've also used information from the Budget and Appropriations Committee report, Then We've also looked at the budget statement. We've also looked at, there's one that I've not indicated here is the budget policy statement, BPS 2025. We've also looked at the budget summary, both for the financial year 2024-2025 and 2025-2026. And the other document that we've also looked at is the supplementary budget 3, the supplementary estimates 3, which was just read around 10 days to the approval of the budget, to the end of the financial year, 10 days. So the two documents are not listed there, but we will update the supplementary budget 3 and the budget policy statement. So generally, what is guiding the process in the budget making process is a number of things. First of all, is our vision, the Vision 2030, and we also have the medium-term plan. This time we are in the 4th medium-term plan, and we are also being guided by the better, the bottom-up, the bottom-up economic agenda. Then we also have documents like the BPS, but these documents, the key things is the key focus that they intend to achieve, which we are supposed to see reflecting in the budget, is equitable allocation, sustainability in borrowing. Those are the things that we are supposed to see. And how do we see those ones? This budget should be relating to the common citizen of the common mwananchi, where the cost of living goes down, hunger, poverty should be addressed, job creation should be tackled, because those ones are in the bottom-up model. They are in the better, they are also in the medium term, and they're also in our Vision 2030, including SDGs, and those should be our core values. The other thing, I think this one you are all aware of, according to the Finance Bill 2025, is that the government is keen on expanding the tax base, and they were looking at raising 25 to 30 billion. I think Alex will talk about that. That is as far as the above documents that are guiding the budgeting process are concerned, and what they intend to achieve. So allow me to take us to the overview of the budget. And as we are doing the overview, we are going to do comparisons here and there based on what is in the what we've got from the budget summary in 2024, 2025, and also the supplementary budget, and also the other documents that I mentioned. So the first thing is on this year, our expenditure. The total expenditure that our government is looking at in this budget, or the one that is facing us as a country, is 4.29 trillion. 4.29 trillion is our current total expenditure. This is has gone up from 3.99 trillion in the just concluded financial year. How is this distributed in terms of recurrent expenditure and the development expenditure? In terms of recurrent, we are talking we are looking at a figure of 3.13 trillion. 3.13 trillion, and development is 693 billion. So 693.2 billion will go to development, but 3.134 trillion will go to the current expenditure. I want us to confirm that the recurrent budget, the recurrent expenditure has increased from 2.84 trillion in the last financial year to 3.134 in the current financial year. However, development expenditure has gone down from 707.4 billion last financial year to 693.2 billion in the current financial year 2025-2026. That is, I think that is noted. Then there is the aspect of the consolidated fund services. The consolidated fund services has increased. Let me see. Yes, the consolidated fund services has gone down from 2.147 to 2.141 trillion. This has been distributed in terms of debt interest payment, debt redemption, then pensions and salaries, those and pension salaries, allowances, and the other expenditures that form the consolidated fund. So debt interest payment will take 1.1 trillion. Redemption payments is going to account for 803 billion. Pension, salaries and allowances will take 239.6 billion. All this, we are seeing debt interest payment increasing, allocations towards pension, salaries and allowances are also increasing. Equity county transfers, the total county transfer has gone up to 474.9 billion. This one we are going to shed more light to it. Equitable share, the equitable share is 405 according to the budget statement that was read by the CS. It is 405.1 billion equitable share. This is an increase from 380 billion. 380, you are seeing 220 billion in that bracket. So this is an increase from 380 billion that was revised after the rejection of the finance bill 2024. So what was actually allocated as equitable share was 380 billion. So this has now increased according to the budget statement read by the CS in Parliament to 405. However, there was an agreement. There was an agreement, a balance between the Senate and National Assembly to increase equitable share to 415 billion. Yeah, to 415 billion. So I think that is clear. Then there is another aspect there of additional allocation in terms of loans and grants, which is amounting to 69 billion. If you add that, is what will take us to 474.9 billion. I think that is as far as the budget is concerned. I've tried to summarize what is in this year, this current financial year, and what is in the previous financial year, that is 2024-2025. So I want us to move briefly to allocations to the executive, parliament, the judiciary, and what we've seen in the consolidated funds and the county transfers. I'll explain something. I know you are seeing a different figure in the CFS, that is consolidated fund services. We are going to explain that. So to the executive arm of government, the current figure that we are seeing, according to the Budget and Appropriations Committee report, executive arm of government will get an allocation of 2.54 trillion, 2.54 trillion from 2.2 trillion or 2.24. That is an increase of 13.5%. So the executive, the share has increased by 13.5%. Parliament, from the Budget and Appropriations Committee report, increased the allocation to 47.99 billion. 47.99 billion from 40.9. That is an increment of 17.3%. The judiciary allocation to the judiciary has also increased from 2.25 to 27, from 22.5 billion to 27.78 billion in this in the current financial year. That is a 23.5% growth. Then the CFS has increased from one.
Hello, Mike. How are you?
Yes. Hello. Someone is talking.
Hi, Mike. I was just texting you to remind you that the meeting link is live. Then I see you joining.
Nice to see you.
Nice to see you as well.
Oh, I don't hear you then.
Can you hear me now?
Unmute yourself. Hello. Can you unmute? Can you mute yourself?
Can you hear now?
Hello.
On my end?
Let me just now.
Yes.
Just a minute. Let me check on those who have unmuted
Can hear
themselves
you. Kindly unmute yourself.
so that I can mute them. Okay, you can proceed. Sorry for the interruption.
Thank you. The consolidated fund services has increased. In the previous slide, we've indicated 2.147 in the previous slide. However, we've in this analysis we've excluded the calculations on or allocations to the redemption payments. So, we only have interest payments in the consolidated funds now here, and pensions, salaries, and allowances. So based on that, the figure increased from 1.237 trillion to 1.272 trillion. So that is 11% increase. County transfers from 380 to 407. County transfers is 380 to 405.1 billion, which is a 7% increment. The figure that we are talking about salaries in the consolidated fund services, we've talked about salaries, allowances, salaries and allowances. That is for the salaries for constitutional office holders, like for instance, the Office of the Auditor General, the President, yes, the judiciary. So those are the constitutional officers whose salaries we are talking about here when we are talking about salaries in under consolidated fund services. So that is that. I had indicated earlier that our budget has gone up by 7%, as we can see. So allow me to dive into the sectors. Allow us to go into the sectors. I think it is good for every one of us to understand that our economy is comprised of 10 sectors. And these sectors we've listed them here. You will hear people talking about PAIR, GJLO, GECA, EICT, ARUD, SPCI. Sometimes we wonder what these are. So PAIR is the public administration and international relations. Then we have governance, justice, law and order. So public administration, allow me just for information, allow me just to help us understand that is where we have office, executive office of the president, executive office of the deputy president, executive office of the prime CS. We have state house there. We also have the State Department for Parliamentary Affairs, Cabinet Affairs, State Department for Devolution, Foreign Affairs, the National Treasury, State Department for Economic Planning, Public Service, all of them, they fall under PAIR. Then when we talk about governance, justice, law and order, that is where we have correctional services, we have the National Police Service, Immigration and Citizen Service, we have IBC, IPOA, the National Police Service Commission, then GECA. GECA is trade, industry, micro, small, and medium enterprise development, EACC, investments and promotion, cooperatives, they fall there. Then education, we know. Education has got a few departments. We have TSC, we have higher education and research, we have basic education, we have science, innovation and research, we have TVETs. Then we have health. Health has got two state departments, the State Department for Medical Services and Public Health and Professional Standards. Agriculture, lands and physical planning, livestock development, blue economy and fisheries, agriculture as a standalone department. Then we have the National Land Commission. So I think that is that. Maybe the one that is also very famous in our space is the special protection, culture and recreation. This has a number of departments. We have sports, culture and heritage, youth affairs, youth affairs, labor and skills development, social protection and senior citizens affairs, gender and affirmative action. All of them fall there. Yes, those ones fall there. Correction, I've said special protection. I think it is what is there, but it is social protection, culture and recreation. I'll correct my slide, social protection. So those are the departments that fall there. Allow me to quickly go through how the numbers have changed so that we now bring this into perspective, how this is now going to, what this means and how it is now going to impact the economy. That is where now Alex will come in, and I think that is where we really need a lot of attention, because questions are important here for our own consumption. So PAIR, which is our number one sector, I've deliberately indicated the approved budget for the last financial year. Then I've also indicated the BPS figure 2025. Then I've also indicated the supplementary 3 figures or how the figures changed according to supplementary 3, and now the revised budget for financial year 2025-2026. Just for us to see how these things, how the numbers have changed. Kindly note that initially the approved budget in July 1st July 2024, allocations to pair was 310.9 billion. However, when we closed to the supplementary 3 for 2024-2025, sorry, the figure was revised to 293 billion, as you can see in the figure. So we want to see in the current financial year, what has happened. Okay, the BPS 2025 I will not read because you can see that one just for information. You can see that for yourself. So kindly note that under pair, there has been a reduction to 278.03 billion. Then governance, justice, law and order. Also note that according to the approved budget, it was 255.7 billion. However, it increased to 256 in supplementary 3, 256.97 billion. But right now, we are seeing a reduction to 250.2 billion. Then you can move to GECA, and I think I've mentioned GECA is suffering further. There's a serious reduction from the initial approval of 46.3 billion to now 40.9. We can see in supplementary 3, it was 45.9, but now our whole 5 billion imetolewa, it has now gone to 40.9 billion. So that is somewhere we need to note and we need to discuss. Then education, there is a lot of contention here. Kindly note that allocation to the education sector, according to what was approved in last year, as at 1st July, we've seen an increase. There's an increment from 676.7 billion to 701.9 billion. There are speculations that education budget has gone down. If you look at what is in supplementary 3, for instance, it was 681.9, and it has gone to 701. However, we need to be keen on seeing what will come out in supplementary 1 and what will also come out in supplementary 2, because I believe a lot might change there. Allow me to take us to health. Health has just seen a very slight, I want to say there's no significant difference in health according to what was approved in by June 30th last year and what has been approved currently. However, do note that what was in the BPS was way higher, 204.5 billion. But right now, we are seeing 136. And in supplementary 3, it was 134.3. So it means health allocation suffered in the last financial year. So the question is, are we going to see a similar trend in the current financial year. Then the energy, infrastructure and ICT sector, we have seen an increase to 500.7 billion. 500.7 billion. We need to know where is this increase. 507 billion. 507 billion. I think we are assuming, and I think we are convinced that one of the areas is affordable housing, and you also, I think the team that participated in the finance bill, you also saw the interesting aspects that were captured in the finance bill with regards to affordable housing. So allocations might be increased due to affordable housing, as well as they are also captured because we've seen, what did we see in the finance bill? There was some exemptions in the steel industry. Environmental protection, water and natural resources, as they've seen an increment to 110.34 billion. Agriculture, rural, and urban development. Another interesting area, agriculture as a sector, we are seeing a reduction. Agriculture as a sector, we are seeing a reduction from 80.5 in the approved budget to 80.2 billion in the supplementary 3, now to 78.1 billion or 78.0085 billion in the current budget. So that tells you agriculture, which is forming the backbone of our country, has seen a reduction in allocation. So, social protection, culture, and recreation. What do we see? Compared with the approved budget, it is fairly, we can say it has increased to 79.3 billion. But when we compare it with the supplementary, what was in the supplementary 3, it is a reduction, because supplementary 3 we had 83.8 billion. National security. This is where I think I mentioned this. If I didn't, this is where we have the Ministry of Defense and we have the National Intelligence. National Intelligence allocation, it has not increased. National Intelligence, they've not increased the allocation. They've retained the same figure that was allocated in the last financial year. The Ministry of Defense, we are going to see. But I want you to note that the allocation in the under national security, I want you to note, compare it with what is in agriculture, compare it with what is in what was also in GECA. You can also compare it with social protection. So in short, if you take, let me talk of key sectors. If you take health and you add it to social protection, you are still not reaching what allocation that has gone to the national security. Health, allocation to health, plus social protection. You want to get 251, if I'm not wrong. So you can see where the priority of our government is. So national security is one of them. I'm also interested in knowing if you ask, I'll be interested in knowing if the National Police and the National Police Service, what their allocations are. Did they increase? What do they have under GJLO? So that is basically what is in these sectors. You've seen the changes, how the dynamics are. in what was approved in 2024, 2025, and what actually formed Supplementary 3. And we've also seen what was approved in the BPS versus what we have in the final, the revised budget for 2025, 2026. So that is our sectors. And I think I want to, before I hand it over to Alex, because we want to look at the projections, we want to look at the fiscal deficit, the financing, and now what this actually means. To me, here, this is the most interesting part, because this is where now how those allocations are supposed to be financed, and the realities that we have in the ground. If it doesn't make sense, supplementary 1 can come as early as this month. But I know the treasury, there's fatigue in treasury, because they just developed supplementary 3 and released it some 2 weeks ago. They just released supplementary 3 a few weeks ago. So the fatigue is real. So that is the only hope we have, where we everyone. But we have to understand these numbers first, so that we see on that. And before I hand it over to Alex, maybe
Thank
I
you
can
very
check.
much,
I can check
Tom.
on you guys if you are still following.
Let me talk to the participants or everyone in the meeting. We appreciate Tom in a
Yes.
very special way. He has shared us on the overview and the sector allocation of the budget. And from the discussion we've seen there are sectors which have been located a bit lower, others have been located more for the likes of the national security sector. And we've seen that health, which is a main also key area, has received like almost similar allocation with what was approved in the previous budget, that is 24/2025. So I know we can proceed and finish with today's presentation, and we welcome a room for questions. So members or participants, if you have a question, you can still keep your question or reserve it until the end of the presentation, and that is when we'll open the floor for Q&A. So I would welcome now Alex to continue with the presentation.
Please confirm that you can hear me.
Alex, you're a bit shaking. I don't know if others are experiencing the same.
Checking, I want to be sure so that we don't lose anybody.
Yeah, now you're clear.
Okay, thank you. So Tom has taken us through the numbers as they are currently in the expenditure side. And for me, I want to take us through how we intend to finance the budget going forward in the coming financial year. And I will use the same method that Tom has used. We compare the current fiscal year, that is 25/26, and the previous fiscal year. We'll be making some comments depending on the numbers, the way that we are seeing them. Maybe to start with, I want to start with the emotive subject of fiscal deficit. Ordinarily, if you have a balanced budget, you should have your revenues agreeing with your expenditures. But currently, what we have is a situation where we've had the deficit financing of our budget, meaning that our revenues have been lower than our expenditure. In the current budget, we are seeing a projected budget deficit or fiscal deficit of 923 billion, meaning this is money that we are not likely to, actually we will not collect. This is money that we intend to borrow from domestic markets and also the external market. Comparing this with the approved numbers in 24-25, as we approved the budget in June of last year, the approved fiscal deficit was 597 billion. However, by supplementary 3, the fiscal deficit has shot to over 987 billion, meaning that the deficit we closed with at the end of the last financial year on June 30th is much higher than what we have in the projected budget for the next year. We have a few comments on that. Our projections from our end indicate that this deficit by the time we close the next financial year is likely to be at the same level with what we have in supplementary 3. Our number actually is 980 billion, but we are yet to see how that is going to play out in the next financial year. We are ready to be wrong, and that is a number that we will keep on watching, but our projection is that this deficit here, 923, we will shoot beyond this, and we are likely actually to go past the 1 trillion mark unless we make serious adjustments in terms of how we are spending in the coming year. In terms of how we intend to finance the current fiscal deficit, 635 billion is expected to come from domestic borrowing. By domestic borrowing, I mean monies that we receive from treasury bills and bonds. Basically, these are monies that we are borrowing from the domestic economy. Compared with the approved budget in June 30th last year, we had projected to borrow 263.2 billion. However, I know by September last year, we had already exceeded this particular projection. I mean, this particular borrowing, and this was subject to parliamentary proceedings, where I think we had overshot by up to around 450 billion. So we are likely to see this number also go up in the current year. But what we are planning to borrow externally is 287 billion. You will notice that this is a decline from what we had last year of 333 billion. This tells you that our economy, its resilience or its capacity to borrow externally is dwindling by the day. Our concern is the increase with the domestic borrowing. We'll see towards the end, it means that then we have challenges with how the economies, I mean, the private sector is getting access to resources internally. In terms of the general revenue that we expect to get to finance our budget, the total revenue is expected at 3.32 trillion, which is coming down from last year's projection of 3.3 trillion. Part of the work that we've been doing this year, we've really pushed Treasury to come up with moderately good projections in terms of our revenues. And this is part of the reason why we are seeing the revenue projections coming down to try and match with the realities. In this case, the projected ordinary revenue basically is what we get from taxes, and the difference between 3.32 and 2.75 is what we call appropriations in aid, or monies that you pay to government when you're going to get services. For instance, you're going to a TSA to get your logbook, you pay something, you're going to get your ID, you pay something. That is what is appropriations in aid. In this case, we are seeing a decline of the projected revenue from 2.9 to 2.75. Many of us may have seen the memo that came from KRA yesterday indicating that we had surpassed our revenue and collection compared to the target. I just want to comment here that that target that we're talking about is a revised target. The original target was 2.9. Then it was revised to 2.55. And then what we achieved by the close of the financial year was 2.57. So you can't set a target that is that high, then you bring it down, you surpass it a bit, and then you tell us that you have surpassed it. As far as I'm concerned, they didn't meet the target because the target was 2.9. But we are also likely to see this 2.7 maybe come down as we do supplementaries in the coming period. What is interesting for us is to note that at appropriations in aid, we have a target this year of 567 billion, while last year it was 426. We are not sure where this additional money is going to come from, given that even last year we had challenges in meeting this target of 426. So now the additional more than 100 billion from appropriations in aid is likely to be challenging. Finally, the other stream of financing is grants. As you can see, our grants have gone down from 51.8 billion to 46.9 billion. This, in my view, is in line with the current realities in the funding world. You saw what happened with USAID and other governments that provide grants to us are also going in the same direction. So we are likely to see this number probably coming down unless our bilateral partners are going to help us in that area. Maybe having said that, we just want to make some quick conclusions looking at the numbers that we are seeing. One is what I just mentioned, that our government over targets revenue, and this has resulted in rising public debt because ministries, departments, and agencies will contract according to the original budget. And if now we then revise our revenues, as happened in the last fiscal year and the many other fiscal years before, then we end up increasing the pending bills, which has a direct impact on entities, that is businesses. And when you hurt businesses, you are hurting the capacity of those businesses to even fend for their own living. You increase unemployment, and the impact is just dire. Number two, we've not seen pending bills being addressed. I think currently we have a pending bill problem of more than 700 billion, and we have the government set up what we call a pending bills verification committee. What we expected is at least to see an allocation going to creating the verified pending bills. We've not seen that in the current budget. And therefore, the entities that supplied the services and goods to government are likely to continue suffering. It's also worrying that we are seeing increases in allocations to functions that are ordinarily county functions. For instance, if you have over 136 billion in health, you wonder what it's doing in the national government, while that money should be with counties. The over 78 or thereabout billion in agriculture, most of it ordinarily should be with the counties because that is where work is happening. The other worrying thing is we've seen a duplication of functions that are leading to heavy expenditure that is duplicated, especially at the executive level. I think right now you find, I think there's a program, in the PPP, there's a program called coordination of government functions, or coordination of policy, coordination of this. It is in about 4 state departments. So none of this should be in one state department. So we are seeing a lot of duplication. Then you wonder why some state departments, for instance, State Department for Parliamentary Affairs, what is it doing? We saw an increase of the number of state departments from the original number. We saw an increase by another 7. When you increase the state departments by 7, you're increasing overheads. So those are the challenges that we are seeing in this budget. We've also seen most of these allocations, we have budget cuts in areas that would be considered objectives of both the medium-term plan 4, the bottom-up economic transformation agenda, and these are areas like agriculture, Also, what Tom has taken us through, we are seeing a serious reduction in the general economic and commercial affairs. And this is where we expect most of the economic activities to be happening. Education is quite interesting. It has an increase, as we've seen, the nominal number indicates an increase. But when you go to basic education, we are seeing a reduction. So what is interesting, that increase is going to higher education, and we are seeing a higher increase in allocation to TSC. For actually, more than half of the education budget is going to salaries for TSC. I think around 350 billion is going to salaries for teachers only. So as much as it might seem like a big number, half of it is gone on salaries for teachers only. So when you now go to the civil servants in the state departments, that number is likely to be anywhere above 400 billion. So therefore, everything free, free primary education, CBC, university education is now left to struggle with the remaining amounts out there. We also see that the government continues to borrow to finance recurrent expenditure. The numbers that Tom has presented to you will tell you that if you reduce from the 2.7 trillion that we expect to collect from ordinary revenue, if you subtract what is going to counties, you subtract what is going to debt repayment, you subtract what is likely to go to salaries, then you are already in deficit financing. So that means any other recurrent thing, you're going to buy water or pay electricity and those other things will already be coming from borrowing, which we've seen is to the tune of 923 billion in the coming fiscal year, and our projection is that that number is likely to go high. So what we are therefore recommending in terms of going forward is we should see these functions that are duplicated across ministries as well as between ministries and state agencies. They need to be rationalized. I think in our view, the government needs to sit down and look at the whole program infrastructure in our program-based budget and identify the programs that it needs to implement, the ones that are being implemented in one or two state departments, they need to be collapsed into one. The activities that we are having carried out in the state departments, and also we have some state agencies doing the same, we should see how we work around that. In terms of protecting the vulnerable, we've seen some reduction in social protection. We've also seen some challenges in education, as I've highlighted. We should enhance allocations to these relevant state departments and avoid tax exemptions to the rich. And we consider tax exemptions that go to dealing with issues of the poor or the marginalized in our community. We should also scrutinize the large recurrent expenditure, especially to the very high offices, especially what we are seeing in the Executive Office of the President, State House, Office of the Deputy President, Office of the Prime Cabinet Secretary, and others. For instance, it beats logic why we have 20 cabinet secretaries and then we have another 20 advisors. On top of that, we have over 50 principal secretaries. We should look at how we rationalize those expenditures at that level. We should also be concerned about the PFM Act recommendation that we should have at least 70% of our expenditure going to development, to recurrent, and then at least, actually the issue here is the other way around, at least 30% should go to development. This one should be enforced, and the way it is calculated, when we do our computation, we look at debt. If you look at the categorization of budget, debt repayment is a recurrent expenditure. So ordinarily, when we look at the 1.0 trillion plus the 239 billion that is going to salaries and pensions for constitutional office holders. If we add that onto now what is in the recurrent expenditure of about 1.8 trillion, and then compare that with the 693 billion that is going to development, it tells you that we are way, way, way below the 30% threshold for development. But the way it is normally computed, you will see the Treasury will net off the entire CFS, and then they compute ministerial recurrent against the ministerial development to give you a percentage that sounds okay. But in our view, the computation should be anything that recurs should be recurrent. That includes debt repayment. Then finally, we should put a stop to borrowing to finance recurrent expenditure. That is purely violation of the PFM Act, and therefore we should just ensure that whatever borrowing that we are seeing goes to development. And the largest culprit of this problem is what we get from domestic. At least there is some sanity in what we get from external borrowing, because what comes from external borrowing is linked to projects that you can see. And when you go to the development budget, you can see this is a road from point A to point B. These are done. This is whatever it is. But what is coming from domestic borrowing comes in as revenue, which can be spent either in recurrent or development. So that is something that we should check. And my concern is we've seen domestic borrowing overtake external borrowing currently. Our debt stock right now is about 11.4 trillion, and over 6 trillion is from domestic borrowing. And it's going to increase even higher because you've seen the numbers that I've just presented. It indicates that our domestic borrowing in the coming year will be in excess of 635 billion. So if we continue this trajectory, this year alone, we are going to contract an additional domestic borrowing of over 635 billion. If you add that to the current stock of over 6 trillion, it means we are likely to close the year with a domestic debt stock of about 7 trillion. I want to stop there, and we could take questions or comments. Thank you very much.
Thank you very much, Alex. We can appreciate them in a special way. Both Tom and Alex have done a very good job just to unpack what the approved budget has, and in comparison with the supplementary budget 3 and what has been allocated by, or what was stated there by the parliamentary BPS, and also what was approved for the year 2024-2025. We can use our reaction tab on the lower side of your machines or your phone, and then you react by appreciating our experts today for the wonderful work they have done. As we continue to appreciate them in a special way, I'm welcoming questions. I'm welcoming questions either from the overview of the budget, from the sector allocation, and also from the financing aspect. As you all remember that it is, or the better is advocating for expanding the tax base, and not as we've seen like they are after increasing or introducing new taxes. Therefore, I'm welcoming questions. If you have questions, you can raise up your hand. If you have a question, you can raise up your hand, and I unmute yourself so that you can project what your question is. Members, I'm taking questions. Anyone who has the question?
So make use of the comment section. We are looking at it just in case there's anyone that is raising a question on that end.
I have a question.
Kindly proceed.
My name is Caroline, and I was asking, what could you do like to because you say like the budget for health iko chini and our main focus is on health. So like what can we do like to make the government like push their focus kidogo kidogo like to health, because like something like health is being like considered the way like education, blah blah blah, everything is being considered. Like what do we need like to do so that like they can push also like much focus like on health?
Thank you very much, Caroline. The question is, the budget allocation for health seems to be a bit low when they are comparing it to what has been allocated to other specific areas, such as the national security and also to the executive offices, or also we can compare it to education. So since we want, or the government is mandated to take care of its citizen, what can it be done so that now there's increased allocation towards the health sector? That is the question for Caroline. Let me take some other more questions so that now our experts can be able to like explain how we can go about that in terms of either sector allocations or the budgetary allocations. Another question? If you have a question, unmute yourself and project your voice so that we are here to listen and also advise. Those who don't want to unmute themselves and say or ask their questions, you can still use the comment section and still channel your questions using that platform or avenue. So I can welcome Tom or Alex to help us understand what can be done for sector allocation, especially health sector.
Maybe I can just one. I just wanted to bring us back to the slide that Tom presented on the sector allocations. You will notice that at BPS level, the health sector had been allocated 204 billion shillings at BPS level. But by the time we get to final approval of the budget, that number comes down to 136 billion. So that tells you that in the original documentation of the budget policy statement as approved by the National Assembly, there was a semblance of both the Treasury and the National Assembly seeing the importance of allocating 204 billion. When you now look at the final allocation of 136, I think that's a decline of almost, is it 70 billion or thereabout? But now, my concern is the fact that part of this money that has disappeared has gone into funding the offices that we have just highlighted. And in our view, when you increase the number of state departments, you increase unnecessary recurrent expenditure. And then it means the amount of money that is then available for health and other key sectors declines. So one of the things that maybe we should do as citizens is to, to advocate for a reduced size of government, so that we just have what is necessary for us to continue operating. I know right now there's actually a petition that is in court that is challenging the presence of the many advisors and what they are supposed to do. In my own view as Alex, I would have thought by the time we were capping the number of ministers to between 14 and 22, we forgot to cap the number of state departments. Now, the president has a free hand in terms of the number of state departments they can establish. If you have 20 ministers or 21 ministers, then why do we need above 50? Are they 57 uh, principal secretaries. The number of principal secretaries, in my view, should also be capped up to an optimum number of maybe 30. Only the very large ministries should have more than one principal secretary, in my view. For a long time, we've had one principal secretary in the Ministry of Health, for instance. Now we have two. The minute you have two state departments, it means that the necessary recurrent expenditure goes up to a very high number. Right now, that is the only option that we have to ensure that we reduce overheads, to ensure that then we can have more resources going into other areas, for instance, health. And thank you.
Thank you very much, Alex. Alex is advocating for capping of the officers within the government, and also looking into the allocation for the executive offices. There's another question that says, how has inflation and cost of living been factored into allocations? How has inflation and cost of living been factored into allocations? Maybe this one is coming in terms of debt repayment or financing, where we see that now, because of the inflation, that now is translated to the interest rates hike, or now to the exchange rate, we see that we end up paying or repaying a lot of money to our donors. Let me say not donors, but those who've loaned us money. So now during this budgeting, was inflation and cost of living factored in? I don't know who is going to help us answer this. Back to you, Alex, as you also prepare to answer another question, that what is the projected fiscal deficit of the budget, and how will the government finance the deficit? I believe this was mentioned on financing aspect, maybe just a projection on the financial deficit that exists in our budget. And as you had seen from Alex's presentation, was that the revenue aside, or the revenue collection versus the budget, there seems to be no balance. So when we say they are not balancing, it means there's a deficit. So there's a deficit, and how the government plans to finance this was through borrowing. And we've seen there is domestic borrowing, as well as they call it external, that is outside our domestic borrowing. So Alex and Tom can also help us understand now what is the projected fiscal deficit. That's a more explanation or elaboration on them. And then also, it seems that we didn't capture on how the government is going to finance the deficit. So you explain a bit more on the financial aspect, or the financial aspect. Back to you, Alex.
Okay, can you hear me?
Yes, I can hear
Okay.
you.
Let's start with the fiscal deficit one. I think maybe we were too fast, but we projected the numbers here. We projected the numbers here, and we can.
Kindly, I request now Tom to share the
Yes.
screen where there is a projection of the financing deficit, or deficit financing.
Yes.
Tom, kindly scroll upwards to get the slide that is showing the deficit financing.
Let me just do that so that our colleague can see.
Okay.
Yeah, so we are here. Just like we had mentioned when we were doing the presentation, the fiscal deficit is 923.2 billion. That is the current, the projected fiscal deficit as per the approved budget by June 30th. That is the one we are using right now. How will it be financed? It is going to be financed through, deficit is going to be financed through borrowing. Okay? And the borrowing is in two ways, domestic or foreign. Domestic means we are borrowing within our borders, and that is through T-bills, T-bonds, and there is also, let me say, just to make it simpler, let me say, we borrow from insurance companies, we borrow from banks, we borrow from pension schemes, yes. So those ones account for domestic borrowing. Then there is the other borrowing, which is called foreign borrowing. The foreign borrowing is where we go to the external market. We go to China, we go to IMF, we go to World Bank, we go to, currently we've gone to United Arab Emirates, we go to Italy, we go to France, such countries. We go to the UK. The president just the other week went to the UK to secure some money. So those ones are called foreign or external borrowing. So of this 923.2 billion, we are going to borrow 635.5 billion out of it. We are going to borrow that one domestically. Then 287.7 billion the government plans to borrow in the foreign market or in the external market. This number, it is interesting. I think we need to make this clear. You see, from the budget that was approved in June 30th, 2024, for the last financial year, the fiscal deficit was 597 billion. But at supplementary 3, which was just in June, that was ready in June, we saw the deficit going to the north of 900, the figure that is there, 900 billion, meaning it increased. So what am I saying? We are likely to see this fiscal deficit towards the end of the current financial year, 2025-2026, it might also go higher. One of the things that is contributing to this increasing gap is the Treasury, the National Treasury and KRA. They are setting unrealistic revenue targets. That is the number one thing that will take us to a higher deficit even than what has been projected here. So, for example, last year, our target was 2.9 in revenue, 2.9 in ordinary revenue, 2.9 trillion in ordinary revenue. What did we collect? The figure that has been celebrated by KRA, 2.55 trillion. You can see that is already, actually not 2.55, 2.57. That is already to meet the target that was set at 2.9 trillion. What that means, that gap, that one is now being taken back to the deficit, and it has to be financed, because what we've seen, the budget per se has not reduced. The budget in general, the budget remained as it was, or even increased higher. The other thing that this means, that might also happen is what can also cause the fiscal deficit to continue also growing is it is still tried with the revenue collection, but it is again on uncertainties or the shocks in the economy. For example, when the Treasury, after seeing that people did not protest the Finance Bill 2025, they were very confident that this year there's going to be stability. The country is going to be peaceful. Businesses are going to do well, and more revenue is going to come. Then we have protests here, and at some point there's a risk of it happening maybe monthly or weekly, and that when that happens, the country loses a lot of revenue, and that will also contribute to the deficit. So number one, setting unrealistic targets. Number two, uncertainties or economic instabilities and political instabilities in the country. Number three is the external shocks, changes in the international markets. Those ones can also contribute here. Conflicts, the ones we are seeing in Israel, the ones we are seeing between Russia and Ukraine, such conflicts between the US and several other countries, such conflicts, and even within Africa. Yeah, such conflicts put external shocks that interfere with our stability in terms of the stability of the shillings against the dollar, and those ones also contribute to the fiscal deficit. And now this one, I want to answer on the issue of inflation. Number one, our inflation rates are fairly, they have been kept at a single digit. From last year, it was, if you look at the KRA circular, it was 6.3 in 2023-2024. 2024-2025, they've recorded 3.6, which is, it has gone down. The president keeps talking about this all the time. The CS Treasury just mentioned that our inflation rates are very okay. We are safe. Okay, so that means that is why you are not seeing in per sector. You will not find sectors that have their allocations have been increased as much as we would have expected. However, if we would have time, we would have compared what was requested in by sector requirements, what was in the BPS, and what was what is now in the budget. Sector requirements is what tells you, because in sector requirements they expect that maybe prices will increase, but that one is for the treasury now to decide when they're negotiating on what to allocate to each sector. But if you look at this, you look at the first sector, the payer, we see 278 in which is a reduction from 293. When we look at GJLO, we see 250, a reduction from 256. What that tells you is that the government is not expecting inflation to increase. They're expecting it to go down. So that is why that is how they're justifying that. Then number two, on inflation, I want to talk about the debt interest payments. That is very key. That is how I think when we looked at supplementary 2, we saw serious numbers in how we were repaying our debt interest payments. It went way up. I don't know if I can get that. Yes, I'm thinking we can get that. So interest payments, debt interest payments really depend on the strength of the Kenyan shillings against the dollar. If the shillings is not strong, is not stable, we will have to pay more in terms of interest, because the value of our money has weakened, and that is really important. But otherwise, according to what we are seeing in this budget, the Treasury and government are expecting that the inflation rates will continue going down, and that is why they are confidently reducing allocations to specific sectors. If I can say, maybe Alex can add something to that.
Thank you very much
Thank you.
for
Thank you, Tom.
elaborately explaining. Alex, you have something to add on the Tom's explanation? The floor is yours.
Okay, thank you very much. I think Tom has really covered it very well. We've presented the numbers in terms of where we are seeing the deficit and its financing. Maybe to bring it home, when we see a deficit financing at the level of 605 billion, this automatically is money that would have been available for private sector to do business with, but government is competing with the private sector or even you and I for the same resources. There's a concept in economics called crowding out effect. This is where most resources go to government, and therefore it means less of that is left to the private sector. If you look at the BPS numbers, you will see that even our GDP growth came down between 2023 and 2024 by a whole percentage point. And the largest culprit is the fact that the government is crowding out the private sector. And that is linked to another question that is on the chat. And if you allow, I can proceed and respond to the question on tax proposals.
Kindly proceed.
Okay, thank you.
On the revenue as well as
what we
the
saw.
tax proposal.
Okay. What we saw in the finance bill of 2025 was a move by the Treasury to work on revenue administration. And then we did have any new tax like motor vehicle circulation tax or eco-levy or those things that we saw last year. But what we have seen is a calculated move to try and change some items, especially on VAT. Some items were proposed to be moved from tax zero rated to tax exempt. Others were even moved from exempt status to VATable. In our submissions to both the National Treasury and Parliament, we did manage to have a good number of those earlier proposals reversed in the final bill or the Finance Act that was signed. But what we had seen initially was adjusting revenue administration measures to ensure that they seal the loopholes for tax leakages and also reduce what we call tax expenditure. Tax expenditure, in simple terms, these are monies that are refunded back to private sector. And what is supposed to happen, especially when you have a zero rating of certain goods, you are supposed to get some reliefs to the final consumer. But there has been a concern that the business community is claiming refunds from KRA, but the reliefs that the final consumer is supposed to get, they don't get it. So what happens is the refunds are used to increase the margins for the private sector. That is as far as the Treasury is concerned. And what the Treasury now was trying to do with the 2025 finance bill was first of all to try and reduce on the tax expenditure and ensure that we collect as much as we can. By so doing, it would mean that then we have more resources that are available to provide services. But in the event that we don't do a good calculation and check whether the reliefs are getting to the final consumer, moving some of those items from zero rated to tax exempt and some from actually exempt status to VATable would mean that we increase the cost of or the consumer prices, which would increase the cost of living. But just to answer your question direct, we didn't have any absolute new taxes coming in. We only had movement of goods from VATable to from exempt to VATable, others from zero rated to exempt. Thank you. And
thank you very much for the elaborating on those areas and the questions that have been raised. And you all know that in the Finance Bill 2025, there was no tax increases. However, some sectors remains to be lowly taxed, and more so when it comes to the budget, or rather when it comes to the health side where we see that the World Health Organization advocates for taxing up to a certain percentage. But now when you look at or you compare the data we have from the Kenya Revenue Authority, you see that there is still low taxation. So it could be maybe another way we have to push the government and also the key players or the implementers on how to go about it. For example, there is recommendation that they need to tax unhealthy products. And among these, we say alcohol is on the list, as well as tobacco usage and tobacco products, as well as nicotine products, where when you compare currently, they are still undertaxed or they're still below the average. And the recommendation says that they need to be taxed at 70% of the retail price. But when you compare the excise that is carried within that, you see that it is still very low. For example, when you look at the popular brand, the total taxes, that is VAT and excise, it only accumulates up to 32%. So you imagine the difference from 70 to 32. And when you're looking at 32% is the composition or a summation of two taxes, where the World Health recommendation is now calling for an increase in excise taxation up to 70% of retail price. So maybe if we consider such areas, or if we venture into such areas, we can be able to fund our budget and even fund up to the recommended thresholds, even when they're saying that health sector should be allocated at least 15%. That is the Abuja declaration. But when you compare right now, you compare what has been allocated to health versus what the total budget is, we still fall short of it. We are almost at likely around 3%. So a fifth is what has been allocated to World Health. So in this, we are able to see that there are still areas that now the key duty bearers needs to look into and also advise. So it seems to be there are no more questions. And it's a high time that I'm calling each and everyone who participated here today to get this information, even for you. They say it past this event, you can still access our websites, you can still access our social media platforms, you can still follow us on our X space and also Facebook and LinkedIn. We still also have a YouTube channel that we also air our, let me say, informative information of all our activities that we are carrying up during this particular year. So if you don't want to miss any of the activities that we do, kindly you can sign up, you can follow us. And our name is National Taxpayer Association, whether it is on Facebook, whether it is on LinkedIn, on YouTube, and also on X Space. So that is what I would like to tell you, that if you're in need of the materials, if you're still in need of the information, you follow us and you'll get the information. I would also like to thank each and everyone who participated and who also or who availed themselves to be taken through or to understand what the budget had for us. And for sure, you've seen that, yeah, the Revenue Authority still have a task, and they need to be a bit realistic on their target, so that now when they're doing the revision, it's rather an upward revision and not the downward revision, and also to give us a clear picture of how much we will be borrowed rather than now coming in from the subsequent. Let me say, there is a name they have said it, the budgets, the supplementary budgets 3 or 2. So it was a very nice time engaging you, and also you presenting as well as listening in our today's meeting. I would like to say that each and every participant, you can still clap for yourself. You can use the reaction button or up along the or downward there, and also appreciate our experts for now telling us what the budget is, or really presenting what the budget for this year has, and also comparing it to what the 2024-2025 had. So you can still react and clap for yourself, as well as you clap for our presenters for the good work they have done. And this is a reminder, don't forget to follow us on our social media to get more information or to just keep updated of what is happening in our current year. So despite we have no any other question, we can still close, or those who still wants to remain, but we'll be ending in 2 minutes. So you're free to leave as we have concluded the discussion. And thanks to everyone.